Hello guys, in this article by Hugo Salinas Price, which comes from the platter.com.mx website, and if you follow this channel you know from time to time that I record his articles that he releases. He's a huge player inside of the Mexican silver industry and goes all across the world trying to teach governments about its importance of its introduction back into money. So without further ado, this was released on the 7th of November 2016, titled A Reversal in the Trend of International Reserves. In the reasons that follows, the statement, quote, all other things being equal, end quote, must be understood. What produces increases in international reserves take place when the reserve currency issuing countries, RC, affect payments to the rest of the world, ROW. Typically, RC payments to ROW take place when A. The RC countries are purchasing more stuff from the ROW than the ROW is purchasing from the RC. In other words, when the RC, as who run trade deficits with the ROW. This is one of the main reasons for having a central bank world, in which some privileged countries issue fiat money classified as, quote, reserve currency, end quote. The possibility of obtaining goods and services from the rest of the world and, quote, paying, end quote, with fiat money dressed as a, quote, reserve currency, end quote, which costs nothing to create. This is an undesirable consequence for the RC in doing this, because the advantage for the reserve currency of the running of permanent trade deficit with the rest of the world brings with it the inevitable demolition of reserve currency industry, as imports, necessarily cheaper, overwhelm local industrial activity. B. Reserve currency payments to the rest of the world take place with the rest of the world government sectors borrow from the reserve currency. Rest of the world government sectors do this when their governments are running fiscal deficits, or when they have plans for, quote, infrastructure development, end quote, which they cannot fund from their taxes they collect from their populations, or when they want to bolster reserves, which may be fallen due to failing exports to the reserve currency. The reserve currency may not be taking up the expected amounts of imports because the reserve currency economies may be falling into a slump. In other words, guys, a depression. Or alternatively, the rest of the world countries may have weakening exports because their governments impose too many burdens on their economies, and so the rest of the world borrows to cover up its falling exports. C. Reserve currency payments to the rest of the world take place when the rest of the world private sector borrows from the reserve currency. Generally speaking, the rest of the world private sector borrows from the reserve currency when there is a desire to expand business operations and local rest of the world credit is unavailable or insufficient, or because rest of the world currency is not acceptable in the purchase of international capital goods, and also because reserve currency credit is cheaper than local rest of the world credit, because if you can print your own money, it's a lot cheaper than borrowing somebody else's printed money. There may be other reasons why payments flow from reserve currency to rest of the world, but I think the above covers most of the operations. Decreases in international reserves happen when the rest of the world affects payment to the reserve currency. This payment has various causes. A. When the economics of the reserve currency slow down and business is slack, the purchases of the reserve currency from the rest of the world diminish. Flows of fiat money from the reserve currency to the rest of the world diminish, and the rest of the world does not receive expected flows of reserve currency money, causing disruption in the rest of the world balance of payments. The rest of the world begins to lose reserves due to the slumping export business. The rest of the world currency devalues and raise interest rates in the attempt to stem the loss of reserves. Devaluation of the rest of the world currency raises the relative value of the reserve currency. Typically, the reserve currencies become more expensive with regard to the rest of the world currencies, as the reserve currencies reduces imports. So what this is basically saying, guys, is when the economies of the US dollar slow down and businesses slack, the purchases that people make in US dollars diminish. The flow of the US dollar to the rest of the world also diminishes because there is less requirement for that US dollar. And then the rest of the world does not receive the expected flows of that US dollar, causing disruption in the rest of the world balance of payments. Now I'll carry on with B. The revaluation of the rest of world currencies motivates the rest of world private sector to purchase reserve currencies in order to reduce existing indebtedness in reserve currencies. Business is slowing down due to flagging exports to the reserve currency, and reducing indebtedness to reserve currencies become imperative. C. The devaluation of the rest of the world currencies creates a capital, quote, hot money, end quote, flight of reserve currencies from the rest of the world to the reserve currency, quote, hot money. Investors seek to purchase reserve currencies and get out of rest of world currencies as a protection against further devaluation in an attempt to persuade, quote, hot money, end quote, not to leave the country. The rest of world increases interest rates. So again, guys, what this is saying, when currencies are devaluing around the world, people want to convert their currencies, fiat monies, into the US dollar form, because that is the flight of reserve currencies, be it the euro, the yuan, be it the pound. And that is evident with the devaluation of the pound recently in the last few months, dropping in somewhere between 15%. Whereas if you were holding global reserve currency, being the US dollar, you would have rode the wave of zero devaluation, obviously losing a small percentage in the conversion process, but nowhere near to the level of a 15% drop. And clearly there is more warnings coming in the next 6 to 12 weeks that it's going to be dropping even further before the end of the year. And I'll just put a side note in here as well. You've got India, who have currently come out in the news stating that they will be removing 2 of the largest denominated bills inside of India, all in order to prevent people hoarding cash of large volumes, pushing people into the banks to keep their funds inside of a bank, unless you want to carry around huge backpacks full of cash to deal with transactions on a daily basis, like buying a car or the latest TV or whatever the item is that you want to do. But if you're trying to withdraw cash out of the banks, you're going to be limited to very small denominated bills, and we can see that happening in many countries. Obviously the 500 euro note has been removed from circulation, so we can see that they're trying to make a push into the banks. Now why are they trying to make a push into the banks? Bail-ins. So carrying on with D. A further cause of a decrease in international reserves might be found in purchases of gold on the part of the reserve currency or rest of world. Now I'll just pause there. Guys, you can see what the banks are doing. The banks are buying large amounts of physical gold on ever increasing amounts and absorbing all that the market can offer, while the actual physical prices are being suppressed to keep them at the levels that they are, in order for these institutions to not only acquire as much as they can, but to give the appearance that there is no pending crisis occurring. There's nothing wrong with the markets. Everything is absolutely awesome. Nothing to see here, guys. Please move along. But that's not the case. These guys are preparing. They're getting ready for what is coming. Why would you be hoarding millions and billions worth of gold if it was, in the words of Ben Bernanke, a relic, a tradition? It's total crap. So carrying on, this would mean that some central banks may have decided to hold gold as a reserve in precautionary addition to their reserve currency, fiat money reserves. Cautiously enough, gold is not officially considered as a, quote, reserve currency, end quote. Such central bank purchases of gold are perceived as disloyalty to the reserve currency system, and so such moves are kept secret. And we know the reason they are also hoarding the gold is because other nations will only accept physical, tangible assets in exchange for goods. No longer will fiat currencies be interchanged from one country to another. It's going to be settlement only in physical, gold, silver, or commodity. Anything else will be laughed at. So it goes to the old saying, guys, he who holds the gold makes the rules. Carrying on. So the question today is, quote, what's happening to international reserves in central banks, end quote. International reserves peaked on August the 1st, 2014 at 12.032 trillion US dollars. And as of October the 28th, 2016, they stood at $11.066 trillion. International reserves stood at a $10 trillion in 2011, but the rate of growth slacked off. The weekly increases in reserves, which Bloomberg used to publish every Friday, stalled and became smaller week by week. As mid-2014 came around, the increases were quite small. It was clear that the trend was for ever smaller increases, and that could only mean that finally there would be no increase, which would be immediately followed by decreases in the total of international reserves held by central banks. This is exactly what took place, and this image here, which is the paper reserves in central banks from 1948 all the way to 2014, and then showing a decline from 2014 to current day 2016 as of October the 28th. Now we can see obviously end of Bretton Woods in 1971 with a parabolic increase in paper reserves. I'll carry on with the topic. All, quote, money, end quote, today represents debt. Fiat money comes into existence as the counterpart to the creation of credit. So the falling international reserves are really a contraction of credit in the world. From the analysts of what causes increases in international reserves, we see that it's all about the expansion of credit in the reserve currency, which produces flow of fiat money, reserve currencies, to the rest of the world. We see that China's exports are slumping. However, China is no longer a part of the rest of the world bloc. It is now part of the reserve currency bloc, because its currency has been recently approved as a reserve currency by the IMF. So China is now in the same position as the US, Britain, the Eurozone and Japan. Theoretically, it is now able to pay for imports, not with reserve currency money earned through exports, but with its newborn reserve currency, the yuan. It remains to be seen to what extent the rest of the world will be willing to accept the yuan in payment. Evidently, the creation of credit in the reserve currency has not produced the demand for goods and services from the rest of the world that it had been producing up until August the 1st, 2014. A huge amount of reserve currency credit was created in recent years, but the money went to the financial sectors and inflated the value of stocks and bonds, and I'll add real estate. The money did not go to the millions of the populations of the reserve currency, and so the populations and their businesses are not spending as they had been doing on imported goods and services. And that's obviously referring to quantitative easing, the creation of debt money into the system, which is only propping up the aforementioned, the bond markets. Thus, the rest of the world has fewer dollars to spend because sales to the reserve currency are in a slump. Consequently, rest of world business wants to pay off previous reserve currency credit because export business is bad and the, quote, hot money, end quote, is hot to get out of the rest of the world investments, which are looking poorly. Rest of world currencies will therefore be devaluing constantly. And I'll pause there. You know, guys, you have people creating books about this subject. You have the war on currencies. You have the race to zero, where it's literally a race for your currency to get to zero first. The more you decrease the value of your currency, the more exports you can ship out and create the impression of stability and progress within the market, the local marketplace. From here on in, and rest of world interest rates will be rising. This is because the trend to increase in international reserves that had been in place since the early 1970s, when dollars held abroad by central banks ceased to be redeemable in gold, is now over. When a trend has been firmly in place in the world for 45 years, a reversal of that trend must be the result of a profound change which will produce a new trend that will not be easily altered. Just as the previous trend was unalterable for 45 years, the new trend is deflation, contraction of credit. International reserves have been falling because they are made up of bonds issued by reserve currency, and these bonds are being sold off for cash. The purchasers may be either the banks of the reserve currency central banks. In other words, bonds held as reserves are being liquidated by rest of world central banks hungry for reserve currency cash. So their price has to fall and the interest rate they produce has to rise. In tentative confirmation of this prediction, we have the incipient rises in the ultra-low interest rates of reserve currency sovereign bonds, which have been noted recently. After the failure of insane policies of ZIRP, zero interest rate policy, and NIRP, negative interest rate policy, it is likely we shall see another lunatic policy, extensive government spending in the reserve currency to, quote, get the world economy moving again, end quote, and prevent deflation from taking hold. Inflation is always and everywhere the result of governments and their banking system working together to increase spending. Inflation can be a long drawn-out process, little noticeable by the population, much like dying by 1,000 cuts. Deflation, on the other hand, is the result of actions on the part of the public, and deflation can take place at great speed, feeding on itself as fear of losses in investments propels the public to liquidate investments as quickly as possible. Think of, quote, Black Friday, end quote, October 1929, which not many people are actually going to be able to remember, because these mega resets generally only occur every other generation, because it takes a generation to forget about them. At the present time, RC governments and central bankers are probably terrified that the whole investment world may suddenly collapse, as the fear of deflation, the fear of massive liquidation of bonds and stocks, may take hold of the public at any moment, and that is why there is a huge suppression of media about any of this pending events that will be occurring imminently. Thus, we are likely to see a desperate attempt at world inflation of money through further expansion of credit in the reserve currencies to finance government spending in order to, quote, get the world economy on its feet again, end quote, and to crush any possibility of world deflation for the time being, which would, of course, only postpone the financial collapse of the world's economy at some point in the future. And that's where his article ends. And it literally is a print to oblivion, because there is nothing else that they can physically do. If they stop the system, it all comes crashing down. If they carry on the system, it all comes crashing down just a little bit further down the line. But this is the prolonged approach that they are taking, thinking, well, we're just print to oblivion. And the only way people slowly start to wake up is when they see the inflation prices of your local shopping bills becoming massively out of whack in comparison to your wages. A dozen eggs costing $100, a loaf of bread costing you $50, and your local wages at the end of the month only equating to $500. There really is nothing they can do to correct this, unless all the debt is converted into physical form, be it gold and silver revaluations. But with that obviously comes its own issues, because then the powers that be aren't able to infinitely create fiat currencies, money. They can't print and promise everything, which is only backed by worthless paper. So the great deception will be inevitable when the masses of people wake up to the system that is coming down. I'll leave that one there, guys. Thanks so much for watching. I'll see you in the next one.